Enjoy Daily News. I'm Hannah and we are back with the latest news on steel industry. Alleima has invested in a new vacuum arc remelting furnace to expand production capacity for segments like aerospace, medical, and oils and gas. Production is planned to start during autumn 2025. Extensive efforts in research and development have led to a new platform for high alloy nickel grades, and Alleima's new product, Ferrochrome 625 and Ferrochrome 925, have been well received by the market. Currently, Alleima has 3 VAR furnaces at the production site in Sandviken, Sweden. With the addition of a new furnace, Alleima will be able to meet the increased demand for remelted materials in high nickel and stainless steel. According to the reports, the German government has approved approximately 1.3 billion euro in funding for the green transformation of ArcelorMittal steel plants in Bremen and Eisenhüttenstadt. It was understood that ArcelorMittal was using different technological approaches to decarbonize steel production in Europe. Due to the government's funding, the company only has to cover parts of the cost required for the construction and operation of new plants. The company has planned to replace a blast furnace in Bremen and a blast furnace in Eisenhüttenstadt with the electric arc furnaces and direct reduction units by 2030. According to the report, on May 29, 2024, the delegation of the European Union proposed to the WTO's Committee on the Safeguards to extend the safeguard measures on imports of certain steel products. It suggested extending the safeguard measures for 2 years starting from the 1st of July 2024. 25% of safeguard duty will be applicable for imported steel products over the tariff rate quota, and the quota may increase 1% every year. The safeguard measure will be ended by June 30, 2026. The Red Sea crisis rippled through the global shipping, causing major disruptions in port operations. The Port of Singapore, the world's second-largest port, faces severe congestion, with ships experiencing up to 7-day delays for berthing, a stark contrast to the usual half-day wait. This congestion, exacerbated by off-schedule arrivals, has led to significant bottlenecks impacting global trade routes. According to reports, Singapore currently has 450,000 TEUs of capacity awaiting berthing of departure, surpassing even pandemic levels. The congestion has forced Korea to cancel planned port calls, further compounding the issue for downstream ports. Container volumes in Singapore surged by 8.8% in the first 4 months of 2024, compared to the same period last year, exacerbating the strain on port infrastructure. Nickel stocks on the LME commodity exchange are often used to point to allegedly rising stock of Class 1 nickel. However, a closer look at the LME nickel stocks based on the origins of the various commodities clearly show that a large share of almost 25,000 metric tons of Class 1 nickel originating from Russia, which has not changed for months, is keeping the actual stocks on the LME artificially high. The Russian share of total LME stocks in this area is therefore almost 30%. With the new sanctions from April 2024, the U.S. government imposed a de facto ban on trading Russian nickel on the LME and the U.S. Commodity Exchange CME. This Russian nickel, regardless of whether it was produced before the deadline or not, is likely to have become virtually unsellable and therefore worthless in the new sanction. According to the latest statistical data, demand for stainless steel from the Chinese household appliance industry remains above the average of the last 5 years. This increased by a further 3.32% in April compared to the previous month. For May and June, demand is also expected to remain above the historical data average. The London Metal Exchange will be open to discussing potential new cash-settled future contracts for stainless steel scrap and ferrochrome, depending on market demand, according to Alberto Soto, product specialist for steel and nickel at the LME. South African miner Marav Resources say the EUBM pricing system has become less relevant for market participants, adding that Glencore Marel will continue to focus on finding market-relevant pricing mechanisms with each customers, but adding that Marel would not be announcing any of these pricing mechanisms. Soto also noted that there has been some market interest in a potential domestic European grade 304 stainless steel scrap future contract. The LME CFR Turkey scrap futures contract, which settles against the monthly average of the Platts daily assessments, has been 5.45 million metric ton traded so far in 2024, up sharply from 4.1 million traded in the January-May 2023 period. Thank you, and this is the end of our news.